Well, hello, folks out there in YouTube land. Got a big show lined up for you. Let's get right on into it. Well, all right, let's pull up that screen. Oh, yeah, Houston, we have a problem. The market is pretty much tanked. September was a nightmare. Friday was a nightmare. It's a mess. Yeah, we got problems. No diggity, no doubt.
This is Houston. Say again, please.
Houston, we have a problem.
Yeah, you can say that again, Tom Hanks. Good grief. I'm telling you, this inflation is nothing but a nightmare. You could see it coming. We've been talking about it for months, and they just keep printing money. Just keep printing money. It's just like what's behind me right there. Just print, print, print. And you know what they do? They take a piece of paper, a worthless piece of paper, they put a bunch of ink on it, okay? And then they back it with the full faith of the United States government. And they keep printing it, and they keep printing it, and they keep printing it. And it's 700 billion, it's 1.3 trillion, it's 400 billion. And you're sitting here going, you've got to stop printing money. You're killing the economy because inflation's a nightmare. Your money's not worth as much because you keep printing money. If you keep increasing the supply of money, you're going to decrease its value. It doesn't buy anything because there aren't enough products out there. And they keep printing money. So inflation keeps this incredibly high. And it's not 8.3%, by the way. Have you been to the grocery store? Holy crap. It's about 30%. You know, they've printed 40% of all the money that's ever been printed has been in the last 3 years. Think about that. That's unbelievable. We've been printing money for, what, a couple hundred years? Holy crap. It just won't stop. So we just keep having inflation. And what does the Fed have to do? Well, their number one priority is to keep inflation down. And it's 4 or 5 or 6 or 7 or 8 times what it should be. So what are they going to do? The only thing they can do is raise interest rates. Raising interest rates is extremely bad for business because it increases the cost of money. It also increases the cost of money for regular folks with credit cards and all that. So they don't have as much money to spend on other things. So it's just a big freaking mess. We'll get into SIRC here in a minute. Staying on the same tone there, it was the worst September for stocks since 2002. What that means for October, that's a good picture. Yep, the S&P dropped 9%, Dow Jones dropped almost 9%, NASDAQ dropped 11%. I mean, September's usually a crappy month, but not this bad. And let's take a look at SIRC. We'll get into the fundamentals of it. But as you can see, this stock actually dropped all the way down back to the 18-cent mark, which is just, think about that. And I'll show you the financials on this, but this stock was sitting right here when not only did you get the announcement of the inflation fighting bill, which was really a climate change bill, but it's great for solar companies. And what is SIRC? Solar Integrated Roofing Company, so corporation, whatever. So that was great for them. And then on top of it, their financials were incredible. So this thing shot up from 18 cents up to 60. And I've been waiting. And I started buying at 30 cents because it had pulled back 50%. And I thought, well, that was a pretty good mark. It might drop as low as 25. That sucker dropped all the way back down to that 18 cents. Right here where it was before they announced those financials. And let me show you these financials. Yeah, they announced these financials where they went from 8 million the year before to 66 million. And they went from losing 4 million to making 21 million. And even after all their interest expense, they're still at 19 million basically, instead of $3.3 million loss. And then you go back up here and you see their work in progress receivables went from 33 million to 68 million, which tells you these folks are on a good path. You know, they've got the growth going like crazy. So what do? I go into security details. This thing's sitting at 106 million bucks, okay? $106 million in market cap. Now, what does that mean? That means with a $19 million net income, multiply that times 4, okay? That's almost 80 million bucks. So you're talking about a forward PE of a little over 1. Are you freaking kidding me? That's value stock on top of value stock on top of value stock for a forward PE. I understand it's not a trailing PE and people prefer a trailing, but this is a penny stock. And penny stocks are really all about the future. And you've got a company that's making money, making good money, and then on top of it, its forward PE is ridiculously low. But here's the reality. Penny stocks are way out of favor. People are not into penny stocks right now, especially OTC. They're scared to death. So they're running into, hell, even Google got killed Friday. Google's under $100. Freaking Google. Google. Nobody can do anything without Google. Meta is down to like an 11 PE, trailing PE. So it's everything's a little bit upside down right now. But you got to know what you own. Now realize, penny stocks are penny stocks. They're dangerous as crap. It's the way it is. That's why I practice the 10% rule. I don't try to exceed that as far as 10% of my portfolio because they are so risky. But I'm just buying stocks that are profitable or that have great growth and are profitable. Well, this one's got both. So that's cool with me. But hey, you can still lose your butt on them. It's just the reality. I mean, I'm actually down on this because I was buying at 29 and 30. Now it's down to 20. Now I did buy some right in here at 18 and 19 and a dollar cost averaged. And now I'm sitting about 24 cents. So I'm down, what's that, 20%? It's not worth the crap. But I know what I own. And I did notice one thing on Stock Twits, and this was, I guess, an individual that's an investor. And Brett Rosen, who's not only an investor, but I think he helped get him some money through his company. It says no more MCA or toxic loans, along with no more dilution for fundraising or to pay bills, SIRC. And then Nacho, last name maybe Libra. I don't know. Wasn't that a movie, Nacho Libra? Anyway, hello, Brett. Are you sure that is all things really finish forever? Did you speak to management of SIRC? Thanks, regards. He said, yes, sir. I have a signed agreement saying that SIRC will not take out any new MCA loans after 8/25/22, which was just a little over a month ago. Now, I know who Brett Rosen is. He finances some of the penny stocks. And like I said, I don't vouch for him. I don't consider his mouth a prayer book. But on the other hand, he does have knowledge of what's going on with these companies. So I take it at face value. You can say, hey, it's worth something. You can say it's not. It's up to you. But I don't think he'd put that out there unless there was some accuracy to it. So while I'm not happy to be down 20%, I'm not distraught about it because I'm kind of seeing that was an opportunity to pick up some more shares, which I absolutely did. And I might even pick up some more. We'll see, just depending on how things come out. With the economy, it's hard to say. But it is surprising to me that it dropped all the way down to here. But this was a pretty good buy point. Let me put this in here because let's see. Yeah, it's right there. And like I said, that was right before all that news came out. And there it sits. And the shorts seem to be backing away from this with it dropping so much. It's down to 24%. It had been high as 50. So I don't think the shorts are coming after this too much. So there's your quick update on SIRC. I think the company seems to be okay. Like I said, their financials are good, but this market sucks. I mean, it really sucks.
But this whole place sucks. That's right, it sucks.
And if you like this content, be sure to hit that like button. Lets me know to continue to cover SIRC. And if you haven't subscribed, hit that subscribe button. I'd appreciate it. And we'll see you next time on Mr. Frugal Investor.